Well, there are plenty of nervous buyers out there in the market right now. And, some of that is because of the myths that are out there in the mortgage industry. There's things that people might believe to be true, but aren't necessarily the case. And knowing this might make you feel a bit easier about kind of where you stand and about buying that next home. So today we're going to break down a handful of mortgage myths about credit, about rates, about lending options, and more. So stay tuned. Welcome in. This is the Smart Mortgage Show. I'm Ben George. He is Bill Litton, Regional President of Cross Country Mortgage. Find us online, smartmortgageshow.com. Bill, there's some myths out there. I think this goes without even kind of mentioning, because I think everywhere you're going to find myths with today's information age. It's overload, and sometimes you kind of find what you're looking for, but doesn't necessarily mean it's true.
Yeah, that's a great point, Ben. And there's plenty of them in the mortgage space, that's for sure. And, we've touched on these before, but I feel like this is a refresh. Some of it's, the same old stuff. New economy, AI driven. It's a brave new world out there. But we need to address these things continually and drive it home, because it's not as scary as you can be made to believe it is. And let's try and dispel some of these myths.
Yeah, these are some of the things that maybe might be holding back some home buyers right now, or maybe, knowing the truth behind some of these might make you feel a bit better and give you a little different perspective on buying the next home. So let's start with the down payment. I think, most buyers believe I need to have 20% down, or at least, hey, putting 20% down is going to save me a lot on my monthly mortgage payment because I'm not paying PMI, Bill. But what's the reality of the situation? Do you need to have 20% down and ready to go when you're buying the home?
You absolutely do not need to have 20% down. And in a lot of cases, it's not even recommended. Buyers can get approved with far less than 20% down. Now, in some markets, it's harder to get your offer accepted if you put the minimum amount down, but that's a whole nother story. So from a lending standpoint, 20% down, absolutely not required.
Why do we hear that so much then? Hey, 20%, you need to have 20%. That's the number you always hear. Is it strictly because of PMI? Why is that kind of the belief that you got to have that ready to go?
I do believe largely it comes from that terrible, 3 letters PMI.
3 letters, yeah.
But, if you think about it, and we do think about it this way, is if the PMI, let's just say, is 0.5% per year, but you could put, let's say, all right, I'm going to take PMI, but the money that I don't put down, I'm going to put it into an S&P fund. You probably return more in the S&P fund than you saved in not having the PMI. So point being is PMI can be very affordable, and it might not be the best use of your money to put 20% down, even if you can.
I think too, if you kind of rethink the way the PMI works, you're really getting a really good deal on borrowing that money, right? I mean, you're not going to be able to find such a small interest rate on those extra dollars if you're borrowing them in any other capacity, right?
Yeah, that's absolutely right. So overall, the rates, mortgage rates are low. If you have good credit, PMI is inexpensive. And even if your credit's not so great and the PMI is up to an 85 or a 90% loan to value, it's still very affordable. So definitely, if you have 20% down and you've got an abundance of funds, by all means. But if you don't, definitely, I would say more than half of the loans that we close every month have less than 20% down. And in none of those situations is it a bad situation for the buyer or the borrower.
Okay. So that's the first myth. Down payment. It's important to understand that, hey, you don't have to have 20% ready to go right now. All right, you mentioned credit. Let's talk credit. I think a lot of people just assume your credit needs to be really high to get approved, even to the point where you need to have perfect credit ready to go to get approved for a loan. But what's the reality of the credit process, Bill, when you're trying to secure a loan for someone?
Yeah, so you absolutely do not need perfect credit. In fact, Fannie Mae and Freddie Mac had a minimum credit score requirement for the longest time that was a 620, and they've dropped that requirement. So you can we've seen people with as low as a 500 score get approved for a Fannie Mae or Freddie Mac loan. Of course, FHA has always accepted lower scores. Now, one of the things you got to be aware of is you can't have a 500 credit score with a 50% debt ratio trying to put 3% down, right? So that's probably not going to work. But if your fear is that you feel like you need perfect or even excellent credit, don't let that stop you from talking to a mortgage professional so that they can run through all the options with you, see where you stand. Likely you're in a decent spot. You can get approved anyway. If you can't, if you're working with somebody like us, we're going to give you a mortgage action plan. We call it a MAP. And that MAP is going to help you to get your credit from here to here and into a position where it is lendable and you are in a position to buy a house.
What about those buyers that have student loans still kind of holding them back, or, another big chunk of debt somewhere else?
Yeah, so we hear this all the time too is, oh my God, I'm not going to be able, because you and I both know college tuition has far outpaced inflation. College tuition is absolutely out of control, and people are racking up substantial amounts of student loan debt. And my heart goes out to anybody, any younger, recent high school graduate who's taking on that kind of debt. But look, don't be afraid that that's going to preclude you from getting a mortgage. There are lots of things we can do to help that student loan payment fit into your debt ratio and help you qualify. There are also other ways that the recent graduate can also work with student loan companies to bring the payment down. So lots of options there too. And we are not seeing the student loan payment by itself being a reason why, recent graduates are not able to get a mortgage. That is not precluding them.
Okay. So that's your next myth that we're going to try to tackle there. Let's shift into the rates, kind of where they stand right now. I know a lot of people wish rates were lower. We talked about how people are adapting to higher rates in our last episode, so check that one out. But a lot of buyers are nervous right now, Bill, and they believe that, hey, I should wait until rates fall a little bit more. So what about this idea of waiting for rates to continue to drop?
But I think it all goes back to, Warren Buffett famously said that he is not smart enough to time the market. The most famed investor of all time, if he's not smart enough, then I don't think almost anybody is. That being said, if you're waiting for rates to fall, that means you're timing the market. Bad idea. And all the while, the house value is increasing. So certainly if we can find a way to get you into the house with a payment that makes sense in your budget, it might not be the ideal payment, but it works. Rates are going to move over time and come down. You'll refinance into a lower rate. And all along, the value of the house is increasing. So do not wait for rates to fall. It is a bad move, proven time and time again by home values continuing to increase the whole way or the whole while you're waiting.
I see a lot of people talk about renting right now, Bill, instead of buying while you wait. Does that make sense to maybe just go ahead and continue renting rather than buying as you wait?
Well, I think again, if you're in a position to buy and you're weighing buying over renting and you're not going to move out of the area anytime soon, you're going to be here for a while, buying always makes a lot more sense because number one, the going back to the value of the property increasing. So the value is increasing over time and it's a compounding of increasing. So it's always compounding by a percentage on the new higher value. It's also a situation where every month you pay, you're amortizing the loan by paying it down. So you're actually building equity in two directions. So rent will never keep pace with that. Now, again, if you have a job opportunity that's going to take you out of the area, or if it's for a very short timeline, that's where renting makes sense. But for a variety of reasons, and I just laid out the financial reason only, buying almost always makes more sense.
Well, if you're not waiting for rates to fall, there's a chance that you're waiting for home prices to crash, Bill. We've seen these go up quite a bit. And I think people just assume that, okay, there's going to be a crash at some point. I'm going to wait for that as well. But there's a little bit of a risk in that as well, isn't there?
Yeah, this is another risky myth, and no one can really reliably time the market. And waiting for a big drop can absolutely mean that you've missed out on inventory, the right home. But again, most likely you're going to miss out on equity growth. And by the way, if you look back historically at home values, use your favorite AI tool and just say, what percentage or what is the average price increase on home in the United States over the last 50 years? And you'll see it just continues to go up, except for, in 2008, 2009, things slowed down for a little bit. Actually, maybe one negative year in there, which is highly unlikely. The last time it was negative before that was probably 20 years previous. So if you're waiting for prices to fall, you're probably going to miss out on 20 years of increases to have 1 year decrease slightly. Use your favorite AI tool and ask some interesting questions. And then even more interesting is in the areas that we serve most specifically, Delaware County and Chester County, Pennsylvania, Newcastle County, Delaware, Philadelphia, and surrounding areas, those values increase at an even higher rate than most values in the country. So very strong market here and highly unlikely that they're going to decrease anytime soon.
Yeah, something to keep in mind. There's a cost in waiting as well. All right, let's finish off here by the myth about, every lender is kind of the same. All the lending options are the same, Bill. So if someone was to tell you that, what would be your argument against every lender being the same?
Yeah, so lenders are very different and they have very different appetites for what they do and how they do it. So it really makes sense if you talk to one lender and they don't give you the numbers that make sense to you, that answers the plan, you might want to talk to another lender, and certainly talk to a lender that comes highly referred from somebody that you trust. It's more likely that way you're going to have a positive experience. So loan options, rates, fees, and strategy. So we are really heavy on strategic planning with our clients. And certainly if you talk to us, we're going to dig deep to find the best plan, the best strategy to meet your goals.
All right, very good. What, Bill, would you say is maybe the biggest mistake that nervous buyers make? The reason why we're kind of pointing this out is we want people to feel a little more comfortable about the process moving forward. So what are some of the mistakes, or maybe the biggest mistake that you see people make that are a little bit nervous and maybe listening to some of these myths?
I think the biggest mistake is trying to wait until everything aligns perfectly, because that's really not ever going to happen. I think that working with a professional that is interested in helping you plan. So there's mortgage people that are going to just wing out an estimate. They're not really going to offer any advice. And that, even though the estimate, it might be a decent rate, the planning's not there. I think purchasing the largest item that you're ever going to purchase in your life, and also taking on the largest debt encumbrance that you're ever going to take on, you need to work with somebody who can give you a clear plan and help you understand all aspects of the numbers.
All right, very good. Well, Cross Country Mortgage can help you do just that. Again, get in touch, smartmortgageshow.com. You can also text the word LEND to 21,000 to get on Bill's calendar and begin to have some of these conversations. If you're nervous, hey, the best thing to do is sit down with a mortgage lender, start talking through some of your concerns, some of your questions, start getting real answers that apply to you and your situation. I think that is what's so very important for a lot of people. Find out what that pre-approval process looks like, and have a realistic game plan, right, ultimately. So hopefully some of these myths clear up some ideas that maybe you had, or maybe some information that you believe to be true that is not quite 100% accurate. But if you have questions for us, we would love to hear from you as well. And please, as always, we encourage you to subscribe to the channel. If you're watching us on YouTube, help us continue to grow there as well. But Bill, as always, thanks for your time, man. We'll catch up again in a week.
Thank you so much.
This program is for informational purposes only. Please consult a qualified professional before taking any action. Bill Litton is a loan advisor and regional president with Cross Country Mortgage, NMLS number 147060.